gentlemen, good day and welcome to Entertainment Network India Limited Q4 and FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Runjhun Jain from E&Y Investor Relations. Thank you, and over to you, Ms. Jain.
Thank you, Sagar. Good morning, everyone. Welcome to the Q4 and FY24 earnings call of Entertainment Network India Limited. To take you through the results and answer your questions today, we have management team from the company here represented by Mr. Yatish Maharishi, Chief Executive Officer, and Mr. Sanjay Balla, Chief Financial Officer. The financial results and the presentations have been uploaded on the company's website and on the exchanges. Should you need any further information, you can reach out to us at EYIRT. Before we proceed with this call, a disclaimer. Please do note that anything said on this call during the course of the introduction and in the document, which reflects the outlook towards the future, or should be considered as a certain forward-looking statement, must be viewed in conjunction with the risks that the company faces and may not be updated from time to time. With that said, I'll hand over to Mr. Yatish.
Thank you, Runjhun. Good morning, ladies and gentlemen. On behalf of Entertainment Network India Limited, I extend a warm welcome to all of you for joining our Q4 and FY24 earnings call. First of all, thank you for joining us on a Saturday. I trust you had the opportunity to review our financial results. Please allow me to provide a brief overview of the same. I am delighted to share that our strong performance continues during the Q4 FY24 as well. The results reflect our consistent effort towards growing the business profitably. Before we move into financial specifics, I would like to highlight that as per India's 103 business combinations, our financial information for comparative periods has been restated to incorporate results from the earlier period of the acquired business. The impact of this restatement is detailed in note number 6 of Regulation 33 disclosure. To help our investors' understanding, we have included a condensed statement of operations in our investor presentation prior to the restatement. During the quarter, our overall top line registered a strong growth of 42.4% year-on-year at rupees 149.3 crores, solidifying our commitment to innovation and customer needs. Both our segments, FCT and non-FCT, reported a robust growth of 26.4% and 48.1% respectively. EBITDA for the quarter, excluding the digital and Ghana business, stood at rupees 36 crores as compared to rupees 23 crores in the previous year. This is translating to EBITDA margin of 27% for the quarter, which is an improvement by 400 basis points year-on-year. FCT segment continues to exceed industry benchmarks, underscoring our leadership position both in volume and value. In the quarter, our volume market share rose to 25.9%, marking a significant improvement of 190 basis points year-on-year. The non-FCT segment observed a commendable 48.1% growth in quarter, buoyed by the return of our marquee old properties like SBI Green Marathon, Spellbee, and others. Alongside revenue growth, we achieved impressive gross profit margin of 39.1% and an EBITDA margin of 25.5% in the non-FCT business. Regarding FY24 figures, at a full year level, the company achieved a consolidated revenue of almost 500 crores. For our domestic operations, excluding digital and Ghana, revenue stood at 453.7 crores in the year compared to 412.6 in the previous year. Furthermore, in FY24, we reported an EBITDA margin of 27.6%, marking an improvement of approximately 500 basis points from the previous year. Additionally, at the full year level, our non-FCT business maintained a gross profit margin of 47.6% and an EBITDA margin of 33.6%. The strong top-line growth and substantial improvement in EBITDA led to a remarkable boost in the PAT, which has moved from rupees 23.1 crores in the quarter FY24 from rupees 17.3 in the quarter 4 FY23. Post-COVID, for the first time, we have reported profit and net profit in all quarters, which has led to a remarkable improvement in the PAT during the financial year 24 at rupees 50.6 crores from rupees 2.34 crores in FY23. Regarding our digital endeavors, we have significantly bolstered our efforts following the acquisition of Ghana. In the quarter FY24, our digital revenues amounted to rupees 20.3 crores, representing almost 24.4% of our radio revenues. Throughout FY24, our digital revenues totaled 47 crores, accounting for 15.3% of our radio revenues. We are actively working towards making ENIL as a complete media entertainment company from just being a radio company. Another heartening development is that our international market turned positive during FY24 and reported an EBITDA of 3.3 crores. I am also happy to announce that our board of directors has proposed a dividend of rupees 1.5 per share. In conclusion, our primary objective remains maximization of shareholder value on the back of sustainable growth and profitability. With that, I would like to invite any questions you may have. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, participants, if you wish to ask questions, please press star and 1. The first question is from the line of Sunit Majumdar from Elara Capital. Please go ahead.
Hello.
Hi, Sumit.
Hello.
Hi.
Yeah, thank you for the opportunity. So I had a 2-part question. Firstly, could you share how much was the revenue for Ghana in Q4 FY24 and in FY24 overall? And secondly, where is the revenue being reported? In which segment is the Ghana revenue? Yeah,
Okay. Do we answer this, or you have another question also, Smith?
No, I'm done with my question.
Okay. So, as we had in the last meeting also said, we acquired Ghana only on December, so it's a 4-month revenue, and a 4-month revenue clocks about 12.83 crores, and it's reported part of the digital segment.
Okay. Yeah. Okay. Got it. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Prashant Apshinde from who's an individual investor. Please go ahead.
Good morning. This is Prashant. Could you elaborate about the Saudi's plan in more detail, and also what's the company's policy going forward for the digital revenue? Do you have any specific plan for digital revenue to increase? So please elaborate on this.
As I understood you, the first question was you wanted to know about the Saudi plan, and the second was on the digital plans, correct?
Yes. Yes.
So on the Saudi plans, we have got into a partnership with one of our partners there who has acquired radio licenses. So we are in the midst of now evaluating and running the stations there. So we're setting up radio stations in Saudi Arabia. The way we look at it, Saudi Arabia is one of the largest economies which will grow in the next few years, and we are very excited about it, not just from radio revenues, but if you look at ENIL business is not just radio, so we are very excited about radio, events, and digital business there. So it's in the initial stages. As we go along in the coming quarters, we'll have more detailed discussion on Saudi. It's still, the MOU is yet to sign. We have done a, first level of interest with the Saudi partner, where we believe as a business, as entertainment business in Saudi looks very exciting. And so we are waiting about it. The coming quarters, we'll be able to share much more information on the Saudi operation. But having said that, as I said, it's a very exciting market to be in. So we look forward for that market penetration. On the digital side, our commitment to transform ENIL from just being a radio company to a multimedia company remains steadfast. In that line, if you look at, we acquired Ghana, which is a music streaming service, and we have been very, very careful about that. We are very sincere about, how do we look at the business, and as I said, our commitment is always profitable growth. So for Ghana, the way we look at it is going to be a pure subscription service and not a free service. Coming from 2 decades of music curation experience in this country, ENL has been the foremost player who curated music and played music where people discovered music in India. So from being a terrestrial radio company and also having an online presence on music, we are in the best available space to garner more share and garner more and more share of the audio entertainment space in India. So from a perspective of digital, we have multifold strategies. One is acquisition of Ghana, which has led to playing music online, and it's a pure play subscription business. The other is we also believe our influencer marketing and our Mirchi Plus social media assets, which also helps us in driving our digital growth. So the way we look at our strength of 300 content people across the country, while we understand nuances of different parts of the country and we understand languages also, and our content people across the market helps us to devise new content strategy, which is pure digital led and acquire revenues for it. So from a perspective, it's a mix on digital, both on video content and music streaming service. Does that answer, Prashant?
Prashant, sir?
Yeah, thank you very much. Thanks.
Thank you. A reminder to all the participants, if you have questions, please press star and 1. The next question is from the line of Sneha Jain from SKS Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I just wanted to ask, what would be the future growth drivers for the industry? Like, which segments are we looking from? Real estate, and probably we'll see a decline in the government advertising. So what do you think is the trend going to be in the coming near-term future?
Thanks, Sneha. Sneha, as I understand, you meant only the business of radio, correct?
Yeah.
So yes, you're right. Government spends increase prior to the central elections, but that's from a central government point of view. We believe the state governments are also active and the way elections are happening across the year. So if you look at this year, you will have Maharashtra elections and other states elections also coming in, and all state governments now spend. So yes, there will be some drop from the way a central government spends money in the last year of election compared to a first year after election. So there will be some drop in it, but I believe there will be some bit of compensation from the state governments also. Coming to other categories, we are very buoyant about real estate, BFSI, a couple of categories which are very, very active. And as we've been telling you in the last 4 quarters, radio business has moved towards more on the retail side than corporate. So the shopfront business has also increased. The contribution of retail clients has now increased to almost 65%. Good part about radio industry it's never been dependent on one specific category. Our biggest category has never been more than 10 or 12%. So, even if the way we look at India as a K-shaped recovery and all, there are some sectors which will always keep firing for the radio industry. So I don't see any reason for worry on the growth part. Only thing is it's going to be a volume-led growth rather than what we would have ideally desired to be a price-led growth. We have enough headroom available for volume to grow, and we've been increasing our market share. And being leaders, we are best placed to garner more market share also, and also look at very positive about the growth in the radio industry.
That helps. And so, except for radio, what do you think would be the other growth drivers for the company?
So, multiple things. If you look at our non-FCT business, which is generally very H2 specific, the events, activation business, which is generally very heavy on the second half of the year. And you would have seen our quarter 3 and quarter 4 results. We have done really, really well. So we remain very, very optimistic. All the reports suggest the events activation business will outgrow the traditional medium growth. We do almost about 250 events in a year. So we are very positive and optimistic of the event business, but that has a skew over the H2. So if I look at a full year basis, yes, the event and activation business is also one big lever where we believe there will be a lot of growth opportunities for us.
So the even business would be around, approximately 10 to 12% growth that you're seeing?
Yeah, easily on that part.
Okay. That's it.
It will outgrow the traditional medium growth.
All right. Got it. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I wanted to know a bit more on the radio yield part. So how were the yields in this quarter, and when do we expect them to recover? And secondly, I also wanted the revenue and margin guidance for FY25 and FY26.
Okay. So the way we look at, thanks, Kevin, for the question. So the yield has improved this quarter, but that's been largely driven by the political advertisement and some government advertisement. Unfortunately, we believe the yields will stay. Good part is that it's not further dropping, so it's now stabilized at a level over the last 4 quarters, and we believe same thing will continue for the next 2 quarters, which is quarter 1 and quarter 2. So we see some price hike happening in the festival period. Generally, media pricing happens. It's a supply and demand case. The pricing yields will depend on that, and we believe some bit of pricing hike happening in the second half of the year. In the first 2 quarters, we don't believe there will be much price change. It's generally slow quarters in the first half of the year. So that's one part. We have been, coming to our second question on guidance. We generally don't give guidance, but you can look at from our 4 quarters, we have been very focused on profitable growth, and we have been improving our margins quarter on quarter. And if you look at FY23 versus FY24, our margins have improved. So our constant endeavor towards the team has always been, gunning for profitable growth and not just plain vanilla growth. So that objective will always remain for us as we do our existing business of radio events and multimedia solutions, and while we drive growth from our digital endeavor of Ghana and other digital opportunities.
Okay, sir. Thank you.
Thank you. The next question is from the line of Shikhar Mundra from Vivo Commercial Limited. Please go ahead.
I want to understand how would you see your capacity utilization of radio stations currently?
Thanks, Shikhar. See, the way we look at, we are well placed. We have enough radio inventory available compared to any of our radio competition. We are right now at an average of 10 minutes of inventory in the peak season also. So we have enough and more room available for volume growth compared to any of the players. Because as a premium player and as a leader, we have always been cognizant of the FCT versus the music play out. And that's the reason over the 2 decades, we have always believed in playing the right amount of inventory. Unfortunately, because of the volume-led growth, there is some bit of yield volume available, and that's the reason we are in the best pace. We believe other radio players have already maxed out on inventory, and that's the reason it will play out in the H2 also, where we see some price growth also happening because of that reason. But having said that, your company, ENIL, has enough volume headroom available for growth.
Okay. And what kind of growth are we looking for, like FY25 in this traditional radio business, the volume growth, and how much price growth we are expecting?
Shikhar, as I said, we don't give any guidance. But if you look at from the way the Indian economy looks like, we are very, very optimistic about the growth, both on radio, both on FCT and our non-FCT business. We remain very, very optimistic of the growth. We don't, and traditional media will also have a headroom. Everybody was saying, this year traditional media will not grow, but if you have seen the growth, we have delivered a 10% growth on FCT also this year. So we remain very optimistic of the India story, the consumption story across the markets, and that's what we believe in.
So in this quarter, like how much of this incremental growth came because of elections, and how much came from the part of the business not related to the election, the advertisement?
So elections was very few because, the election got announced only in the end of March. So there were only some bit of elections in the quarter. Largely it was driven by government business. In a way, to contribute about almost 27 to 28% of our revenues. But that happens in any preceding quarter of elections generally. It's not that, the other business was not coming in because we cap inventory, so we take the right business, and as election and government inventory comes at a better yield, we prefer that business. So that contribution always goes up in the quarter.
Okay. So I'm just trying to say, if elections would not have happened, we would have still the numbers would have been more or less the same ballpark, like we would have done other ads instead of the government spending, government ads.
More or less, you are right.
Okay. And what was the spending like in quarter 3 for the government spending? What was the government spending in quarter 3?
See, the way you look at it, government over the years has been almost about 10 to 12% business coming to the industry. It had fallen down in the previous year. This last, if you look at just quarter 3 and quarter 4, it's almost about 10% contribution to the radio business.
Okay. Got it. And for the digital business, like how do we look at it? So is it a break even right now, or we are still at losses at EBITDA level for the digital part of the business?
See, we have acquired Ghana in just 4 months ago, as I said, from December. And as I said, it's going to be a subscription-led business. We stabilize this business. We believe Ghana will become break even in 2 to 3 years' time. Till that time, it's going to be an investment. I don't see it as loss, but it's an investment in a product which we believe will deliver great results for us as a company.
Okay. So that's the Ghana part of the business. But what about except Ghana, the other digital part of the business? Because Ghana did 4.83 crore. Except that, we did, I think, around 24 crores in digital revenue, if I'm not wrong.
Yeah. So the way we look at it, there are multiple things in digital. I was telling you about the Ghana, the major losses or the investment goes in the Ghana business. The other business is largely profitable because it comes as part of our digital offerings of, affiliate revenues from YouTube, Instagram, and also there's no loss. It's more of, how do you leverage your social media assets? How do you leverage your RJ as influencers? So that business is always there. We do a lot of original content, which we have been doing over the years of like a Kareena Kapoor Khan show or a Gauri Khan show, where we make revenue out of sponsorship and the digital revenues. So those businesses are generally profitable. It's the investment and if you look at Ghana came in December. Before that, we had a Mirchi Plus as a platform, which was also an investment phase. With Ghana coming in, that platform becomes one platform only. So it's not going to be, the loss is not going to be Mirchi Plus and Ghana. It's just one platform now. And we believe in the same investment, we'll have a better product, which is audio stories, podcast, and music, combined with our reach across the country. It's a much better product, and we are well placed. So the investment is going to remain specifically only on Ghana.
Okay. So what I'm trying to understand, as an investor, because this is digital, we have been investing for the past 3-4 years, if I'm not wrong. And so I understand digital business first requires a lot of investment, and then it gives you a kind of a J-curve type of return. So, when will be that phase when, we stop investing and we, start monetizing the kind of things we have built, the type of subscriber base on YouTube we have built, and maybe the music library which we are building in Ghana. So when will we start monetizing it actually? When will it start reflecting in numbers?
So Shikhar, if you look at a couple of things, one, we started pure investment digital only 2 years back and not 4-5 years back. So 2 years back we started our Mirchi Plus app. So that's one point. The second point on Ghana, we have a stable base of subscribers, the paid subscription business. We believe we need a couple of years to market it because the product was not marketed, been out of sight. It's a great brand, a lot of brand salience which is there. If the search optimization of Ghana is very, very strong. So two brands, ENL and Ghana coming together, it's a great partnership to be in. It will take a couple of years to invest into it to break even. So our assumption is between 2 to 3 years, Ghana on a self model also will become profitable. But we have enough avenues available to sustain it. As I said, you have to get your tech right. So there is investment on tech. It's a dynamic product, so you invest in tech. Content was not there, so the content cost is going up. So there is tech cost, carrying cost of cloud and all. So for the next 2 years, we believe there will be some investment, and in 2 to 3 years' time, Ghana on its own will become profitable or break even to start with.
Okay. Got it. And do we plan to start acquiring more things like the way we acquired Ghana? Do we plan to acquire the things, or G plus Ghana will be enough for the next 2-3 years, and then we'll plan to monetize them later? What's the plan?
See, the way we look at it, we have enough on the plate right now. But any interesting opportunity comes in, you always evaluate it. So it's not that we close our ears completely. But you're right, with Ghana, with our non-FCT strategy and the radio growth, we are well placed for it. But if any interesting opportunity comes in, we'll always evaluate it for sure.
Okay, got it. Thank you. I'll thank you very much. I'll join the queue back for further questions. Thank you.
Thank you, Shivam.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Dwanil Desai from Total Capital. Please go ahead.
Hi, Yatish. Good morning. So my first question is, you said that the FTT business grew by 10% this year. So 2 parts to the question. One is, going forward, how do you look at the industry growth? How should we think about it? Let's say GDP growth at 6-7%. So media industry, and within that radio, how will it grow? And within that, Mirchi being at 25-26% market share, how do we intend to grow? I'm not saying that next year, I'm saying over next 2-3 years, how should we think about it? And second, you mentioned that, we are currently at 10 minutes inventory utilization, and in the past cycle, we have gone up to 13-14 minutes kind of a number. So, given that, how should we think about pricing part? Because generally in the last cycle, we were the market leaders and we were the one who were leading the price or yield improvement. Now we have enough inventory. So are we the one who are going to be following that yield improvement? Again, some light on that.
Okay. So on the FCT growth part, yes, we had a decent growth this year, which is led by volume and market share. So it's not just the industry growth which is helping us to grow 10%. We had outshone the market, overall market also. From a radio industry point of view, if you look at, the way I look at the media industry is in 2 parts. There is a digital and there is traditional. When you combine both, then you always feel radio industry or traditional media industry is not looking so rosy. But from a traditional media industry per se, the radio industry has remained constant as a contribution, and we believe a 5-7% CAGR for the next 5 years should not be issue. Anywhere in the world, if you look at, US or radio industry has remained steadfast in that. It's not the golden period of double-digit CAGR for the next 5 years, but a 5-7% industry growth for radio should remain. The way we look at industry as market leaders is, yes, then in the near future is going to be a volume-led growth, and also for us as Mirchi, the growth will come from market share gains also. And that's what you have seen in the last 1.5 years. Our market shares have improved drastically, both on volume and value. On pricing, so that's on the our guidance, or per se, my humble estimate of the radio industry for India would be. On your second question on the pricing part, we remain still the premium player. Pricing is governed by market factors also. You might want to price your product at a certain level, but there is a volume and a supply and a demand case also. So when the market demand is little bit not very, very buoyant, you look for market share gains. So there is some bit of yield which has dropped down post-COVID and it's taken time to recover. But as I said, we believe some bit of price correction will happen in the next festival period. So maybe 2 quarters down the line, it will happen. It's unfortunate. Nobody likes just a volume-led growth, but the pricing is a function of many things. It's not just a uniform price across markets. It's not one India price. It's every price for every station is different. There are many factors of prime time, non-prime time, weekends, weekdays. So it's a complex thing. It's not like other telecom products or anywhere where you have a one standard pricing. So it has multiple factors. Having said that, we are market leaders, we are a premium player. Our pricing premium still remains very high compared to any of the competition, and we are committed to it. As we see post-elections, the India story will come out much better, and all the growth factors we look at, the GDP growth, with the economy doing well and the demand coming back across sectors, we'll see the price hike, the yields improving much more.
Right, Yatish. So my question was more towards that, since we have inventory and room for volume growth, is it that some other players will start that pricing improvement? Is it dependent upon they doing it, or we also think that if the demand comes back and we still have room to increase volume, we may still be able to increase pricing? So that was the context of the question.
Daniel, if you look at in our history of 2 decades, we have always been very cognizant, as I said, between the advertisement to the music player. People come to radio to listen to music, correct? Ads are part of it. You have to be cognizant of the fact that that's what, for the last 2 decades, our DNA has been very clear that the consumer and the listener comes first. So the ratio of FCT to songs has always been right. In tough times when inventories are not, when the demand has not been great, we do some bit of relaxation of inventory. But we are always very cognizant of that fact. It's not dependent on competition. We have our own internal guidelines, because that's the reason we are leaders in listenership and revenue, primarily because of that. That we run less ad, we are a premium radio station, and we command higher price. So we are not dependent on others. It's market factors and the objectives of market share gain which leads to it. It's not a function of just looking at competition dropping price or competition improving the price. It's multiple factors. Having said that, being leaders, we will drive the price increase in the industry.
Okay, got it. And second question on the digital side. You talked about we being in investment mode and will remain like that for next 2-3 years. So thinking about this, you guys have any kind of a number earmarked or that a ceiling beyond which you would then not invest? Because the concern from the investing side is that whatever profit that we generate in the radio, if we continue to invest higher and higher amount on the digital side, then the actual profitability may not show in the interim. So how you guys think about it?
So the way we look at it, if you look at the industry, everybody intends to become multimedia company. So, when you look at traditional and digital, if you don't play both the games of traditional and digital, that's not the right way to look at it. In a technology impacted, digital impacted world, you have to be playing both. We have to be playing both. So the way we look at, yes, radio remains a cash cow for us, and we will drive our profitability from there, being very efficient and being market leaders. That will be there. But being a future looking company and making your company future centric also, digital plays a large role. We are very cognizant of the fact how much we invest in it. And if you look at a 2 to 3 year horizon in a digital industry, investment for 2-3 years, we believe is not very, very high. And if you look at revenues also coming from Ghana, in 4 months you already delivered 12 crores revenue. It's not that you're building a product from ground zero. There is a strong affinity to the brand. We understand the music space very well compared to any other competition. So we believe what we have taken on digital side on Ghana, that's just one part of digital. Ghana is not just the only part, but yes, it's one of the main levers of our digital business. We believe a 2 to 3 years investment horizon is a good looking horizon to break even. In today's time, when you look at all digital startups and all, if you look at from that perspective, we are well placed. And because we are playing the game to our strength, we understand, the Indian market very well, the Indian music choices very well. So combined with technology and human intervention, we are well placed on it. So our investment bets are looking for 2 to 3 years. We have done only 2 years of it. We pivoted from just being a non-music app to now a much more holistic product. And with a horizon of 2 to 3 years, I think we are well placed on it, Vanil. It's not very large quoting. We are cognizant of the profitability part. As I said, it's not just about radio business, but at the overall level, ENIL remains very, we look at profitability at every level. So from that perspective, I can assure you that from a company's point of view, we will be very cognizant of that fact. But I think for 2 years of investment in digital, with a revenue which is already there, and with our knowledge base of the country in the music space, we are very, very well placed to deliver a more holistic media and entertainment company in the near future.
Great. Thanks, Atish, for very detailed answers, and wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Shankar from Trustline PMR. Please go ahead.
Hi, good afternoon, everyone. Thanks a lot for the opportunity. So firstly, from my side, sir, can you split the breakup between this total digital revenues you have given, the 20 crore, Ghana, stood the rest of the numbers?
So on a full year basis, our digital, you wanted for the quarter or the full year basis?
Quarter.
Just 1 second. Yes, sir. So on the quarter, we've done about 20.27 crores of digital revenues. Our platform revenues are 15.7 crores, and other revenues are about 4.57 crores.
Okay. And what about these MMS and other solutions?
Multimedia solutions, this quarter delivered about 17.5 crores, and the activation and event business was almost about 15 crores. Sorry, 20 crores.
So this includes some part of the digital also?
Yes. The digital component, which I said 4.5 crores, is part of multimedia solutions also. Some part of it is part of multimedia solutions also.
Okay.
What I said, 17 crores was a full multimedia solution business.
Okay, got it. Yes, sir. So, regarding the growth perspective in the digital business as such, so currently we are doing around 10 crores of Ghana quarterly, and the rest of the business is around 30 crores. So now, how do we see this Ghana business growth over next 2-3 years, and how do you see this digital component over next 2-3 years, including the other digital business?
So Deepak, we have been in the past quarter also, you would have heard that we are gunning to make ENIL as a full multimedia entertainment company. Our radio contribution used to be 65 to 70%. We believe radio contribution will come down in this year and next year to about 50 to 55%. Digital ambition is, today we are at this quarter, Quarter 4, our digital revenues are almost 25% of our radio revenues. So that endeavor will remain this year for sure. The way we look at, as we've been speaking, Ghana, we look at making it profitable or break even in the next 2 to 3 years. Our aim is going to be that ENIL dependence on just radio remains, if not more, at about 50% only. So the way it would be 50% radio and 50% non-radio, which will include events and digital business also.
Okay. So where I'm coming from this is like radio business is like single-digit volume growth kind of business, and then the other solution part will grow in somewhere around 15-20%. So how do we see Ghana even much higher than that kind of growth we can assume?
See, because it's not digital advertising, it's a digital subscription business, people. It's not pure advertising. We do a lot of digital advertising business also separate, but on Ghana specific, it's a subscription business. The way we look at, in India, there are 200 million free music subscribers, of which 8 million pay today. If you look at the EY FICCI report, that's a number when you look at from an industry point of view. The way we look at it is there is huge funnel available to acquire more and more subscribers. It is up to individual players to give a better product, better experience to consumer at the right price, will help us drive subscription and drive Gaana revenues. Our numbers, our budget planning on Gaana, we believe in the next 2 to 3 years will make us profitable at a right price and a subscription base of about 3 million subscribers.
Okay. Sure, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Deepak Kapoor from Benchmark Capital. Please go ahead.
Hi, good afternoon, sir.
Good afternoon, Deepak.
I wanted some clarification on the published numbers. In the press release and in your earlier remarks also, you allude to, FY24 PAT as 50 crores. This doesn't match with the P&L. Can you please tell me how this 50 crore number is arrived? Which number is alluded to as a PAT?
I'll ask Sanjay to answer this.
Yeah. Hi, Deepak. So basically, you have to take care of, so there is a mismatch which you are mentioning. I will request you from the ad copy part of it, go and refer to note number 6. See, basically what is happening that because of the application of Index 103, we had to do the restatement of the numbers. That's how the audits and the regulations compel us to do. Now, as you must have seen that FY24 number, we have shown the PAT at 50 crore. And I will tell you that if you go back to the note number 6, you will find that detailing we have given about the acquisition of the business of Gaana. So the impact of that acquisition, if you deduct it, then you will find out the differential number. It is not a mismatch actually, it is a restatement.
Okay, so if we remove the impact of restatements, the PAT would have been 50 crores.
Yeah.
Okay. Also, Q3 versus Q4, there's a jump of almost 10 crores in other expense. Can you throw some light on this?
Yeah, sure. I will do that. Just a moment. Just a moment, Deepak. Just a moment.
Sure.
So, major contributor of that increase of other expense cost by 10 crore is because of the Gaana music cost. So, just a small heads up on that. Gaana as a music app is a platform which helps the listener to listen to his favorite music. Now, when we do that, back to back, we have to have the arrangement with the music labels because in ENIL, we do not own any IPR of any of the music. Okay, so these are technically, the IPR of the music is owned by all music labels like Saregama, T-Series, Tips, Venus and everybody, Sony. So now this is the first quarter when you are kind of seeing the impact of Gaana coming to ENIL, both on the side of revenue as well as the cost. Now, if we talk about this 10 crore differential, the approximate amount of the content cost due to Gaana would be close to 7.5 crore.
Okay, noted. So this is not a one-off, it is likely to be then future also. This is just content cost with Gaana.
Of course, Deepak, because if I am taking something on the revenue, I have to take something on the cost relevant component wise. Right?
So it's part of the same investment what we are talking about, Deepak, on the Gaana business, on revenue and the cost front. Both will reflect into it.
Great. That's clear. Just one last question. Did the subscriber numbers for Gaana, did they go up the last quarter? They're stable or which direction?
So, Deepak, it's too early. As I said, it's been December only. Its subscriber numbers is driven by behavior. Initial for the first 4 months, our endeavor has been to make the product better, get all content there, stabilize the product. Having said that, our subscription numbers have remained stable, which is a good part. And as you've seen, we have not even started advertising about it, about the product. The whole idea, because we believe that it has so much salience available, the subscription numbers have remained stable. Important for us in the last 4 months and in the coming couple of quarters is to get the product and the tech really up there for consumers to see value and have a better experience, both on the music side, recommendation, search, interaction with artists, how do you look at fan clubs. So that's where the endeavor is going to be in the immediate future while we look at building our subscriber base. It's going to be a journey. It's not a quarter-on-quarter number. Yes, everybody wants, and we also gun for more and more subscribers. But important is to get your product right, the value equation right for the consumers before you look into market.
Got it. Sorry, just a bookkeeping question. I missed it during the previous conversation. What was the Ghana revenue in FY24 and in Q4 FY24?
So Ghana revenue total was about 12.5 crores in the year, and in the quarter was about 9.5 crores.
9.5. Okay. Thank you so much. Thank you.
Thank you. Thank you, Deepak.
Thank you. A reminder to all the participants, if you have any questions at this moment, please press star and 1. The next question is from the line of Sunit Majumdar from Elara Capital. Please go ahead.
Hello. My question has been answered. Thank you. Like my follow-up question. Yeah. Thank you.
Thank you, Sumit.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, Sagar. Again, everyone, thank you very much for joining on a Saturday. I extend my heartfelt gratitude to each and every one of you for the continuous support you have been providing to the company through the years. I would reiterate that the last year quarter results have been very encouraging. We remain focused on profitability and maximizing the shareholders' wealth. Thank you very much. Have a good day, guys.
Thank you, members of the management. On behalf of Entertainment Network India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.